This is Shorthammer. It is the 30th of October, 2019, and we're taking a look at Amazon. Now, this is the Amazon 4 hour. If you've seen my videos before, you've seen me describe and really go into detail about all these different levels and channels and what to watch for. So with Amazon, what we were watching for today was this 1776-ish area and what Amazon did around there. And if Amazon went above bullishly, then we could look to see movement to the 1789 to 1792 area. The statement that I made to some of the people that were asking me questions about Amazon pre-market was that watch the separation from the 1776. Usually from that area, it will separate $10 in either direction. So whether it's going to be $10 up or $10 down. And the reason why I had that $10 down theory is that if you see right here, this is my lower supply demand zone, 1747 by 1762. I figured if Amazon did go down, it was going to at least test the 1762 area and potentially test this strong supply demand line at 1756. And that's what I was looking for. So let's look at the 5-minute chart to see how this played out. And this was not a trade that I took yesterday. I did not take this trade at all. So this is one that I missed. And I kind of was watching it, but I was kind of distracted trying to keep up with what was going on with BA and the testimony and the reaction. So I kind of missed this Amazon play, though I was able to walk someone else through it. I was unable to take this play. And so if you were looking at Amazon, what I was watching is look at the previous day. And the previous day, we topped out around 1778. So pre-market, we had this little spike. That's cute. But then Amazon pulled back below this 1776 area. And so going into the open, what I was watching for was, would we see strength above the 1776? And the statement that I made was, hey, guys, like, man, if this thing does not stay, or if this thing does not go bullish to the upside, like whichever direction that you choose on this, either it's going to be $10 down or $10 up. And my buddy was asking me a couple of questions about it. I was just saying, hey, either way that this thing goes, it's going to move. And we figured it'd be a $10 separation here. And what we saw was a $10 separation to the downside. It went right into the main intraday pivot. And then the expectation that we had was met right here, right? When it touched this area, that was the first expectation. The second expectation was the 1762 and a potential back test of this area to try to hold, and then potential failure to the downside, or we could get some sideways chop, being that we're heading into the FOMC. So this was a trade that I was watching the entire day. And when we sort of held the 1756, and the market was weird at that time because the SPY was dipping and Amazon would not. And the SPY kept going lower and Amazon would not. And some of the other market names were getting weaker. Apple hit the top, 248, was coming back down. So it was interesting to watch that Amazon kind of held the line here, and the buyers consistently stepped in and kept Amazon from breaking this. If Amazon broke this 1756, the next target was going to be the 1747 area. And the importance of that, if you've missed my prior videos, is that between 1747, roughly 1747, and 1833, since the last earnings when Amazon sold off, it's been in that channel and been unable to build any significant structure outside of that channel. And it's fallen to a lower channel that we have, which is like the 1745 by 1705. That's a different channel. But it was short term in that channel. The longer term channel that it's been in for more than a month, or that it wasn't for more than a month, was the 1747-ish area, or upper 1740s by the 1830s, roughly 1833s. So on this one, when it was sort of going back up, we saw this consolidation and we didn't see any capitulation. You could have technically taken a long off of this 1756 and had a stop of about $3. Like if this thing goes down $3, I'm out. And if I see any significant bearish candle formations below this, I'm out. And it bought back up through the 1762s to here. And then we pull back down to 1762 and here. When we were here, you really have to start looking and saying, okay, we're not getting any separation and we're not getting a break above the 1768. So here, potentially, based on the weakness in the market and no news of its own from Amazon. Remember, Amazon missed earnings and bought back up. So watching this area here, there was a potential to get short here with just the inability to separate. Amazon, when it doesn't separate, something's going to happen. Whenever it's consolidating or going sideways for any amount of time, you know something's going to happen. And with the weakness headed into the close, my expectation was a retest of the 1756 area. That did not happen. And what actually happened was they kind of tried to limp us into the close without allowing the full move to happen. And we saw some weakness here, and we were at roughly the 1765 when we started to fall below here. And I'm like, hey, if 1764 breaks and we see 1764 on the ask, then we're going to see 1762. And the break of 1762, which is the top of our supply demand zone, opens up the supply demand line at 1756. Just based on how the market was going and the weakness that we were seeing in Amazon and the inability to make higher highs. And you see these lower lows as we sort of roll down here. If we had more time on the day, there's a good chance that we would have seen a potential test of the 1756. And this is not something that I would swing because there's so much news that's floating that any type of good news that doesn't even have to be Amazon related could take us back up through here. So going into today, what will I be watching for on Amazon? Well, we have a main intraday pivot here at 1765. I'm going to probably, if it's me, personally, I would draw a line roughly about in this area. And it doesn't seem like it's that important. It's probably not a big deal. I want to see if Amazon gets up above that area and what it does. Just because of the right before the close, this was an area that we had a problem getting significant buying pressure to push through. So this is all going to depend upon the market. And I'm not going to take an entry if Amazon gets here and just jump in, but I'm going to see what Amazon does. What do the buyers and sellers do at this level? And if they reject, do they sell back down through this 1765 area? If we push up. And if we, instead of pushing up, we go down, if we're below 1756 at the open, and we backtest 1756 and I see weakness, I see bearish candle formations, I'm getting short Amazon. And my target is going to be seeing if we get through the 1753 area. My real target is really going to be down here around the upper 1740s. That's what I'll be looking for on Amazon today. Whether we get separation to the upside or separation to the downside, I'm looking for clear candle formations and indications that show me, okay, hey, from the previous day, this is what people are thinking coming into today. And if there's no new news and if there's still weakness in the market, then I'll be looking for more downside. But I'm not going to race into any burning buildings. I'm going to wait for the chart to tell me, hey, this is what's happening, so I could get a good entry. And if it goes against me, I could get I just get out, for minimum loss and look for a re-entry. If I think something is a short and I'm wrong, I'm getting out. If my plan coming in was not to average, then I'm not going to average. I'm getting the heck out. I don't care if I exit. Let's say, and I don't mean to make this too long, but let's say that today Amazon opens up and it's pushing up into this area, and I see bearish candle formations and it pulls back below the 1766, 1765 area, and I look to get short. Let's say I get short and Amazon does one of these crazy moves. It's going to go here, then it reverses and rips through the top here. I'm not waiting for 1776 to average. If it gets above here and I see bullish candle formations, I'm out. That's it. I'm not even, because now I'm going back to the drawing board and saying, okay, let me reboot my plan. My thesis didn't work out because whatever the reason, if it's news, if it's just, hey, buyers stepped in, whatever it is, the reason why it blew back through my entry, I'm getting the heck out. And I'm not just going to get back. I'm done, because I thought that was the, that was going to be continued weakness to the downside. And that's only if I didn't scale out any contracts on first contact with resistance. So if something goes against you and your plan is not going exactly as you orchestrated in your mind, or you worked it out on paper, or whatever, wherever you sort of dictate your plan, get the heck out. Like, there's no reason to stay. You got a parachute. This is that you're not strapped to a seat on a plane that's crashing. You can't get out. You got every single trade. You have a parachute, and that parachute is your stop loss. Like, hit the brakes. Get the heck out. And so that's how I'm watching Amazon for today. And we'll see if we see any meaningful movement. But Amazon is a great consolidation to expansion ticker, where consolidates and expands. So I'm definitely tracking this, especially with the FOMC today. I'm definitely tracking Amazon. I'm going to be following it all day to see the flare downs or flare ups, depending upon what news may come out of the FOMC, and also if there's any intraday movement. Because sometimes when you're headed into FOMC, that no one really wants to take a big position. So the certain tickets will just kind of move sideways and matriculate between like a small range bound area until the announcement, and then you get some serious expansion. So we'll see. The last few announcements, what Amazon has done is it's flared down into a demand area, and then they've bought it back up, and it's taken off and run higher than the high of day. And whatever that flare down area is that it flares down to, or that, should I say, the lowest flare, let me see what flare down. So let's say here, the announcement came out here, and you see this flare down into this area, which you could say is a demand area. Then what has usually happened is that they've bought it back up above whatever the high, let's say this was the high of day, above the high of day, and we've taken off. So that's usually what has happened. But also, whatever that flare down point is on Amazon, that's usually a point to mark, because it's going to revisit that point at some time. If it's a sell the news event, maybe not that day, but maybe the next day or the day after. So it becomes an important point for about a week or so, whatever that flare down point is.